Gold prices solidly higher, hitting a 3.5-month high this Wednesday as we see a sharp sell-off in world government bond markets. We have Peter Hugg of Kitco Metals joining us today. Peter, welcome back to the show.
It's a pleasure to be here again, Daniela.
So gold holding above 1,300 here, Peter. Is the metal being supported by rising world government bond yields? We also see a lower U.S. dollar index today providing a boost to gold. What's at play here for you?
Well, I've been constructive gold over the $1,300 level. I'm still not a complete bull on this market yet. I've been touting for the past 7 to 10 days that I'd really like to see a close over 1322 on gold and 1722 on silver to create more momentum to the upside. And it's failed at both those levels for both metals 3 times. So until it clears that level, I'm still neutral at this level. This morning's news, or the overnight news, that China might be backing away from U.S. Treasury yield bond buying, I think was the main catalyst that caused gold to ratchet higher over the Asian close coming into the early morning hours here in New York. And it was more, I think, worries about the dollar and China's backing away from the dollar. There's been some speculation that maybe the U.S. isn't going to be the reserve currency. I mean, it's a lot of noise. I don't think there's anything to the story, but it was enough of a story to scare the market, and that's why you saw gold hit the high this morning. Subsequent to hitting the high, however, with bond yields continuing to increase, especially in the U.S. with the 10-year bond now over 2.5, that basically pulled back the fear trade and money started to circulate back into the dollar from a yield perspective, and that's what took the edge off gold right after the opening. So right now we're in neutral space, but there's a lot of volatility going on, especially in the bond market.
Why do you think the China news is not bigger than it seems?
Because again, it's a rumor that some official made a comment that they thought that it might be prudent to scale back purchases of U.S. treasuries and bonds and possibly not buy them at all. I mean, I don't know if that's the official Chinese policy. China is still the largest holder of U.S. debt. I don't think it's in their interest to make those kind of statements just randomly. Again, I'm not sure what kind of meat is behind the comment, but the initial reaction obviously created a lot of movement in the market and sensitivity, especially on the interest rate front.
Okay, because I think a lot of people will take that news and run with it as a reason that gold will continue to rise throughout the year. But do you think it's just going to have like this short-term daily impact?
No, I mean, I'm constructive the gold market. I mean, if you look at the fundamentals of the overall market, you have higher rates, you have a strong equity market. It looks like U.S. growth might come in at 3%. So, when you look at those fundamental factors, ignoring North Korea, which is always a wild card, gold should not be at 1320. It probably should be closer to 1200 or maybe below 1200 based on the current dynamic scenario of where rates are and where equity prices are. The fact that gold is sitting at 1315 indicates to me that there is an underlying worry to this market, and big money has got some of that allocation into gold. And so I continue to remain constructive on gold, but again, for the next leg up, I just need my technical levels to be taken out, and they have not yet achieved that. But again, I'm optimistic that the metals are still constructive at these levels.
All right, and just a quick note on Palladium, Peter, which is staying nicely above the $1,000 mark here. How do you see Palladium?
I think Palladium, again, is going to be in a deficit in 2018 with demand continuing, especially from China for Palladium. The industrial metals, I still think, are doing well. Palladium is a dangerous metal in the sense that it's very volatile. I mean, it's gone over $1,100 a couple of times over the past few trading sessions, met with some profit taking at those levels. Today it's down some $20. But again, Palladium, I think, is constructive. If you can handle the volatility, I still like Palladium for a near to medium term play with the global economies growing as they seem to be.
Peter Hugg of Kitco Metals, thank you so much for joining us.
You're welcome.
And thank you for watching. We'll be back tomorrow.